Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap very quickly. We're just going to be talking a little bit about the markets, what kind of news took place this week. Could the market's predictability, the volatility, been predicted a little bit? And what could next week look like? Now, I don't actually see anything either going positive or negative. We did bounce off Friday right at the bottom and just trended back up, which is very nice. So very quickly recapping over Friday or over this week over on Facebook, talked about 4 options you guys could consider during these bear markets or just kind of volatility. Option 1, just kind of hold through the storm. If you'd like, you can add some more capital in and begin investing in some current or future planned stocks. You could sell out or sell all or part of your winners in order to get cash on hand, in order to average down on some of your losers or buy some losers. You can also short some of the indexes. I talked about even on downtrending markets you guys could short. If you notice that the NASDAQ is going down by 3% possibly in the day, you guys could short it by buying into the ETF SQQQ just for a few hours, not for the entire day, and definitely don't hold it after hours. But if it's trending down 3%, you could basically shorten it by 6% and come out positive. Now, none of that worked for me this week, I'll let you know. I did manage to still fall down roughly 7% this week, so not an amazing week, but all is good, still positive. So talked a little bit about, made a video on it, stock market pullback, what to do during the bear market, planning for a stock market crash. So just different things. Talked about basically the same 4 options and kind of gave examples. Talked a little bit about what my plan was kind of going forward. Talked a little bit about Friday going into Tuesday. Markets open low because Apple was going into the negative after hours. Banks were going into the negative after hours. Wherever the banks are going to be heading, that's normally where the market's going to be heading the next day. And Apple, one of the largest holdings in both the Dow and S&P 500. Talked a little bit about now I have some cash on hand, looking at some stocks to buy. I did buy some. I ended up buying KMB. They make tissue. Procter & Gamble, Leg, and Son. So those are some good stocks there. Talked a little bit about what causes the fluctuation. During a regular market day, 50 to 60% of the market trades are done by robots, are done by computer accounts. And during these extremely volatile markets, they can make up to 90% of the trades. So, markets, the robots' computers were blamed for a lot of what took place on Friday. And there's a whole bunch of news out there to kind of, talk a little bit about this. People may have been rearranging their funds in January. They may have hit 366 days and they decided to kind of, change their funds around. That caused some of the markets or the computers to kind of go out of whack. Released my 5 stocks dividends next Wednesday, so I made that video, released it, talked a little bit about like a screenshot of my new positions and old positions today. So I did buy into Leg, Verizon, Pfizer, Son, PG, and KMB, or maybe I actually sold out of them. No, I bought some. Okay. Besides shorting the indexes, I also posted that you could also leverage your, for the positive. If you see that the markets could be uptrending on, say, Wednesday, the markets had uptrended a little bit, I believe, you could buy to leverage the S&P U Pro, to leverage the Dow U Dow, and to leverage the NASDAQ TQQQ. Now these are some that I began to monitor using Robinhood. It alerts you if any stocks move up 5% up or down. Dow just blew all their leads in 2018. President Trump finally talked a little bit about the stock markets. After 2 days, he broke his silence, said that, anytime that the market, in the good old days when good news was reported, the stock market would go up. We had a lot of companies reporting earnings. 75% of them were positive. We're in a very good, very nice market right now. Everything has been very positive. Companies doing bonuses, increasing minimum wage, or not minimum wage, but just their minimum to, say, CVS, I believe it's $11. Walmart is bumping it up as well. We had a lot of fun stock on the news today. Released a video of how you guys can find your own ex-dividend dates, days, weeks, or months in advance using a fun website that I like to use. Talked about how all of us that are currently in the markets have now lived and partaken through a correction. We've had two bear markets where we lost 49% or more. This was back in 2000 to 2002, 2007, 2009, and we've gone through 6 corrections. We've gone through 2003, 10, 11, 15, 17, and now 18. We are down still 9%. S&P 500, I believe, is down 2. Let's flip over here. Down 2.02, Dow Jones 2.14, and the Nasdaq only down 0.42. So still pretty nice. So hey guys, know that you have lived and partaken through a correction. Now I was kind of giving an example here. I use Robinhood to track the leveraged account, which is UPRO and SPXU. Now I talked about how these are two opposites. When one falls, the other one gains. So this can be very dangerous if Friday, for example, the market started off positive, went very down negative, touched the bottom, and then rebounded. So imagine if you had bought the shorting one, you were like, yes, I'm gaining 5%, and you are like, okay, I'm gonna let it go. I'm not gonna watch it anymore. The markets are gonna trail down. It's gonna bleed out Friday like it has been on Thursday and Tuesday, and you're not going to watch it. You would have lost every single thing again. But if you had sold out of that position, bought into UPRO, you would have made another 4%. So you would possibly up 8 to 10%. So that was kind of interesting. Talked a little bit about, I was listening over to Bloomberg. They're an international, talk about all the markets kind of going on around. Talk about some of the, what's going on with the Olympics. Talks a little bit about the news, different indexes and stuff. So I posted a link over there. This week I was paid out $19.68 by Lowe's. Thank you, Lowe's, for keeping me in the positive there. Warren Buffett, poor guy, he went from $91 billion down to $80 billion in a single week. Imagine losing $11.2 billion in a week. But this article was really, you don't ever lose money in the stock market unless you sell. And Warren Buffett did not sell. I'm pretty sure he is buying into Apple. He's going to be buying into JP Morgan, Goldman Sachs. He's buying into these stocks that have fallen down hard. And just look at let me look up Goldman Sachs stock. Well, I can't type, but here we are. For the week, Goldman Sachs actually did not too bad. They went down 7.26% this week. From their highs, they're down 9.51, but that's not actually bad in comparison. This is a nice little trending stock there. In a year, I don't like being, in a year they were up 9.13% before this whole thing took place. Now they're up roughly about, they're still negative over the year. So yeah, let's see here. Market research tab over on Merrill Edge talked a little bit about the weekly wrap. It basically just kind of talks about the equity dropped in the S&P 500, how the indexes are now down between 0.4 and 0.21. We already saw that over at CNN. Talked about what kind of caused the fear to kind of take place with rising interest rates, realization that stocks have gone too far, too fast, and a lot of them people were de-risking and trying to get into a little bit less explosive volatility ETFs. So there was an implosion of short volatility that acted on expedient for broad-based and active selling activity. S&P 500 soared 7. They talked about 2018, the first January, it had already gone up by 7.5, and then 2017 it had rallied 19.4% over the year. Talked a little bit about how it breached the 50-day simple moving average for the first time in 5 months. Weak-handed investors were consistently shaken out of buy the dip. So the Bloomberg, they talked about, where are all these guys that are buying the dips? Nobody was buying the dips. Congress missed their deadline. We talked about this on Friday. The government shut down for the second time in 2018 at 12:01 a.m. Reopened up about 6 o'clock after the bill had been passed for $300 billion in spending over the next 2 years. That's going to be adding some fun debt to the ceiling. Alright, it's going to be extending the debt, but it's going to be lowering our deficiency by like a couple trillion, I believe, or something like that. Let's see here. Not too much in here besides, what was it, oil. There was something in here about oil. Oil's down right now. Crude oil drops 9.5% to 59.23 per barrel at their lowest level since end of December. You know who's not getting affected by that? California, with their $4 gas prices. And just kind of leaves you with a recap there. So we're still down. Dow Jones 5. Oh, this week. So here we are, 5.2 down, 5.1 down, 5.2 down. My portfolio went down 7%. So, I really, one of my mistakes is my portfolio is fairly large. I had, 20 stocks at some time. And I think during this time of a market, it's great to have these stocks that really diversify your portfolio and you're getting paid dividends. But at the same time, if you want to consolidate or sell it out of a position, each one of those is one more trade that you have to do and kind of manage. Whereas if you just bought into an index that you see that's kind of going down, you can just buy the specific index. You don't have to worry about nitpicking, which one am I going to buy today? Okay, I see this one's down 6%, this one's down 7%, how much equity? If I'm just focused on just one ETF, it makes it so much easier. And that's how I am inside my IRA. It's just one ETF in there. So we talked about, I don't know if I talked about that already. REITs, Real Estate Investment Trust, they went up 2.4% as a whole. Quite a bit of them got upgraded. We have Snap. Snap's not a real estate. Why is it showing Snap there in my real estate tab? Maybe this is just talking. Okay, sector-wise, information technology up 2.53, real estate up 2.4, and utilities up 2.18. So all those that are holding Reality Income, I know one of the YouTuber or one of my subscribers and viewers, he had recently bought into Reality Income. Reality Income is a great stock. They've been paying out dividends for 22 years, quarter over quarter, month after month, just paying out dividends. They recently increased their dividends. They're up 2.82% today, so they didn't have too much of a trend back today. They have lost quite a bit in just the last month alone. Since there was an announcement that interest rates are rising, they have gone down 12.64%, bouncing now, hitting their support here, which is actually the lowest it's been in the year. This is just a terrible stock if you had held it for the year, but over the long term, it's still, over the last 5 years, we're looking at a 7% increase and at a peak point of 52% before trending back down in August or July 29th of 2016 was its peak, and then from then on has just trended down. That's unfortunate. So what's the deal with Reality Income there? And then WP Carey, they are up. Actually, they're probably even now, up 4.6% over the last 5 years. And just over the year, they are down 2.95%. So that's a very interesting one. Now, I also wanted to kind of bring up one of my fun little tools I use over at Merrill Edge. Now, this one, it kind of predicted the whole volatility. Now, it evented, I don't know if I ever showcased this with you guys, but going into January 29th, starting right around January 22nd, there was a lot of volatility here. The buys and sellers, so if we click on this little icon here, on the right hand side it says that the balance between buyers and sellers recently dominated by the bulls is evening out. We may see lower prices ahead. Now this was on January 29th. Imagine if you were over here, you looked at this, and you were able to say, you know what, you're one of those guys that may trade out of the markets during volatility. You traded out of the market and you saved yourself a little bit of a mess. You were able to buy at these low positions now. There still is, there were a couple bearish movements here where it was starting to pick back up. Wednesday, I believe, February 5th. February 5th is Monday. So there was some momentum Monday to try and break it, but they did not break through it. Tuesday, they opened up down in the dumps. They worked themselves up. Wednesday was pretty positive, and then they came down Thursday, came down Friday, they opened positive Friday, trended back up towards the end of Friday. They're sitting at 240.44, which is right here, and the last check right here, I believe, is this green one, which is just showing a short-term bullish. So going into next week, we might expect bullish events. So we may see some higher prices as prices seem to be recovering from oversold as losses on down periods. Over the last 14 bars, there are no longer overwhelming gains on up periods to the same extent. So look at the difference here in the trade volume. Now going into this week, there was a lot of trade volume. February 6th, this is Tuesday, so a lot of people sold out Tuesday, buying in back on Wednesday, buying back in on Thursday a little bit more. Friday they bought more. Lots of you can see down here at the bottom the strength. So it looks like they hit their support and they're looking like they're coming back up. They hit their support there twice. So February 5th, Monday, hit their support. If you bought in Monday a lot and just kind of waited, Thursday they dipped, you bought some more in, you would have been positive again going into Friday. And looking like next week, we're seeing 4 bullish events, 12 bearish, 6 anticipated events are forming right now. And most of them are, we have a lot of bullish events, so we have some momentum building, so we are seeing some momentum. I don't know, I don't go into this very often, but this stuff shows some very nice, this is something I'll have to dive a little bit more to get some more handles. I'm trying to figure out so much that's going on in Merrill Edge. I have access to Market Pro, I have access to this Rectaglia, I have access to looking up specific stocks and reading all about them. There's a lot of great stuff over here, so this is just something I'd like to share with you guys. So just looking at ticker symbol VOO, it does look like February 12th is looking like a short-term bullish, bearish there. Maybe if it does cross over the 200 moving day average, that may take place on Monday. So just depending on these events, look to see if it will continue upwards or if it'll continue downwards. So that is it for this video. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided in this video is for, it's my opinion and for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. So I give out some little tips and tricks that I try and use. They may not always work. As you can see, I'm down 7% this week. So that is it. Thank you guys for tuning in. Let me know in the comments how your week was. Were you able to stay above and beyond the S&P 500, or did you sink a bit with me? I still got paid out some dividends, so that's nice, but it hurts. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.